Live.
Hey, what's up, guys? Jason Bale.
No intro?
And Ian Ho. You're right. We didn't do an intro today.
Dude.
Sorry, I forgot the intro today. It's all right. We don't need the intro. We're just hopping on live.
I need the music.
All right. Should we back up a little bit?
I'll just run it now. Run the intro now.
Okay. Everyone is logging on now. We're gonna do our little open theme song for it.
Welcome to the Real Estate Reserve Podcast with your hosts, Jason Balin and Ian Horowitz.
All right, was that better for you? You got your theme music?
Much better. I like the music. Gives me a little time, gets me pumped up, you know?
I honestly forgot about it. You know, I've been doing a bunch of videos, and I completely forgot it. I forgot about our theme music for the Real Estate Reserve Podcast. So welcome everyone to the Real Estate Reserve Podcast. I'm Jason Balin at Hard Money Bankers. This is Ian Horowitz from Equity Warehouse. Tuning in live. We typically do live shows at least once a week. Most topics are geared around real estate investing, mostly the sexy topics related to raising capital or finding deals, right? That's sexy for a lot of people. And the topic today is related to rental properties and the evolution of property managers and software, something that both Ian and I have a lot of experience with. Ian has more experience than I do, but in general, you're going to hear both of our perspectives, what both of our opinions are with this. And as always, if I can find this other button, comment any questions that you might have. Maybe you need some service providers. Maybe you just have a question on what type of software to use or where to find the software. Anything like that, feel free to comment. We can get you on this. You can either chat it in the comments and we'll answer the question, or if you want, let us know you want to be on the show and we can throw you on here real quick. And if you're enjoying what you're listening to, feel free to share the broadcast as well. So real quick, let's just talk about the start of this topic. And I know I'm rambling on this, but Ian's got lots to say as well. We both are talkers, so don't worry, he'll be talking as well. Related to the evolution of property managers and softwares and rental property portfolios, first, you got to determine who you are and what you want to do with your business and how many properties you want to buy, right? There's a big difference between, hey, do I want to self-manage or do I want to get a property manager? Or can I do all of this on an Excel spreadsheet, or should I get some really expensive, sophisticated real estate software? All of that really depends on who you are and what you're looking to do, right, Ian?
Yeah, absolutely. And I will say I've been on both sides of it. When we first started, you know, we went for the most robust. This is what the big guys are doing. Let's use the software they are to having the most rudimentary, and we have the biggest portfolio we've ever had today, and what the positives and negatives are of each. And then don't forget, inside of real estate, you have management software that Jason's going to use that I'm not going to use to manage loans. I have property management software. You have commercial properties that, you know, you need to be able to backbuild CAM. You got storage properties that come with a whole nother level of stuff. So really identifying what your asset class is and what your niche is, I think really determines the type of property management software that you should or shouldn't have. And then furthermore, that relates back to your property manager and their capabilities if you're going to hire a property manager, right? You know?
So let's start off first kind of with a small portfolio, and then we'll work our way up to a larger portfolio, right? Because we've all had small portfolios at the beginning, and then stuff and software we're using then differs than what we're doing now. At any time, if anyone has questions related to this, feel free to comment below, and we'll happy to answer and give as much insight as we can. So, in general, you know, let's say you have one rental property, and that's all you want is one rental property, right? Or a few rental properties, and that's all you want. Look at time versus money in that situation. You might say, well, you know what? I don't want to deal with any headaches. I don't want anyone to bother with me. I'll pay whatever it costs, 8%, 10%, 12%, whatever it costs for property managers to handle everything. So I don't have to deal with that myself. On the other side, you may say, well, you know what? I want to make the most out of this rental portfolio. I have good debt on it. I'll be able to get it paid off in the near future, and I want to save every dollar I can. And on it, and you just do all the work yourself, and that's fine too. There's no right or wrong. I know lots of successful investors who self-manage. I know lots of successful investors who outsource that to other stuff. Personally, we like throwing money at things instead of our own personal time in our business, because I have a full-time job as a hard money lender, right? And rental properties are a side business for us. So we had a property manager that ran everything. The downside of it, and then nothing to do with the property manager, they actually did a great job. The downside is we didn't have enough control over it, and we realized we wanted to be a little bit more controlling of the situation and of the properties, and kind of balance the financials a little bit better. So we actually had an employee in-house that we got up and running and trained, and we were able to have them as a full-time property manager for us. So that's what worked for us. We had additional resources through our lending company, Hard Money Bankers, and we were able to go that way. And because of that, we were kind of able to mold it, and we learned through the process, but we molded it based on what we thought was the best model. And that's kind of the direction that we went personally. And we'll talk about the property management side, then we'll talk about what softwares we use in a second.
Yeah, no, and for us, we're self-managers. We pretty much all except one property, we self-manage. And for us, it came down to what was more important for us: some of the tenant bells and whistles, or was it the accounting side of things and what worked for us? So when we started, sure, we used the Excel spreadsheets, but then we realized when you go to do your taxes, you're not always accounting for every dollar in, and you're not also accounting for every dollar out, which really changes your tax liability. So for us, as we went through our growing pains, we started with spreadsheets, and then we graduated to QuickBooks. And that was the first software that's a lie. That's not the first software we used. We utilized the same software that Jason was using, but we found that it was actually too robust for what we were at the time and couldn't utilize all the features inside of it. And a lot of the tenant bells and whistles weren't relating to our tenants. So it didn't really work for us. And I'll be honest, this is not a bad statement towards them. This is just honestly who we use. We were using Yardi. Jason still uses Yardi today. And we thought, oh, well, the big boys are using it. It's got to fit our business, right? Like if they're using it, it's got to work for us. Well, it's actually almost too robust of a program for what we had. And I mean, we were still managing, 30 or 40 units, and we thought it was too robust for what we had. Jason, I don't know what your experience was, and maybe because you had someone on it every day, it was a little bit easier for her to use, but it was too much for what we needed in a 30-unit single-family portfolio.
Yeah, I mean, I think it's whatever works inside your business. I mean, it's just similar to like lending softwares. When I talk to other lenders around the country, some people use a sophisticated software, some people use an Excel spreadsheet, and even with a big business, they do. So I think you could use Excel spreadsheet. I think you can use QuickBooks. We use Yardi, not the really, really expensive one. Which one do we use? I think it's Genesis. There's Genesis and something like that. I think the one we use is $250 a month. Yeah, does that sound right? $150 or $250 a month, and it's a little outdated software. I don't love it, but we're used to it and it works for us. I used to have an ownership interest in a property management company years ago, and we used Propertyware, and Propertyware is super robust and pretty freaking awesome, but it was too hard to freaking use. And I mean, we had thousands of properties, so like it worked fine with that. But with where we're at, self-managing it, it made sense for us to use Yardi, Yardi where we're at. And it's, I mean, honestly, I could if you guys all know, and it's not public information, we're trying to actually sell our portfolio, or part of our portfolio right now. But at the time we had 20, now we have 10 or 11 units, but at the time we had 20 units. It worked, but we probably could have done it on an Excel spreadsheet. I mean, we have personality types that we would have spent the time to build it out to our liking. But the cool part about Yardi, which we like, is, there's a tenant portal. So tenants can go on, log in, look at their balance, look at their statements, pay online, things like that. Make it easy.
Yeah, and so for us, like in our evolution, we found out that it was too robust. The tenants weren't utilizing the features, and as we were growing our company, there was a lot more accounting that was going on into cost basis of properties, selling properties, a whole different gamut of things that we were utilizing on the accounting side of things. So we actually said, you know what? Let's dedicate a text line, right? So we have a two-way text feature like on CallRail or Vumber. Let's have email. Let's have the capability to talk to our tenants, and they know exactly where to find us. We'll dedicate that as a maintenance line, and let's only run our portfolio on QuickBooks. And that ran us up to about 100 units, and it was very clean. Our accounting was spot on. Every balance backed into our numbers. Our accountant had access to all of our information. Taxes were super easy. So for us, we found that QuickBooks was really good till about 100 units. We were able to manage the day-to-day operations with no issues. And just so everyone knows, up until our most recent purchases, it was literally just me, Ryan, and Dan, right? And Ryan was running all the operations, and we were running the accounting side of things. So we really had no issue. We would just keep a whiteboard of service calls that came in. We would print the text out, and then we would just basically triage or prioritize our service calls, and that worked great until we purchased our most recent purchase of this 76-unit apartment building. And Jason, stop me if you want, but we said, okay, well, if we're going to have this apartment building, we were running a 7-unit apartment building, a bunch of 2 units. We were running what else? We had some commercial spaces that we were running. We were running all that through QuickBooks. We found that the biggest issue wasn't so much the reporting of service calls. It was actually that when you went to go send a link for a tenant that had an open balance, it was such a pain in the butt for them to go through the pay feature to pay multiple invoices if they had outstanding balances. Now, what we did like about QuickBooks is like if you had to go to rent court and you could print a ledger out. I mean, we literally had the judge say, this is the gold standard of ledgers. This is what everyone should run on. And it was very easy to read. So as we're growing, that was like a really important feature to us. And we said, well, we need a tenant portal now if we're going to buy this 76-unit apartment building. We want to be able to manage tenant requests a lot easier than just having one text line, try to find it, big pain in the butt. We actually wound up going with Tenant Cloud, who said that their services integrated with QuickBooks. It was basically just like a front door feature for a tenant portal. It actually wound up being a huge mess. And sometimes you get what you paid for. But I think someone on a small level, Tenant Cloud would be great for them. But I think where we're at, it was just too much. And we wanted to get back to the core root of accounting, making sure that's the most important stuff. And the nice thing about QuickBooks is it's corporate accounting, right? So we've been researching, and I'd love to hear some feedback from our viewers. We just engaged into a contract to go to Appfolio. We'll do an update on this and let everybody know how it goes. But the features, the accounting features, everything that they seem to be offering is where we're headed. And I think it's going to be not only beneficial for the tenants, for their user portion for them, but on the corporate accounting side of the stuff for us and for our investors and everything else, it's going to provide the exact reports that we need and make everyone's life's easier. Like we talk about time versus money. It might cost us a few dollars more, but it gives us more time to concentrate on deals. And I think that's way more important in the grand scheme.
And also, no business is ever going to be successful unless every deal you do ends up being like a widget and you have a system or a program just to put it into, right? So you can be fully scalable, right? Like I know if I bought another rental, we have a system in place, right? The rental gets purchased, it goes to our back office, and it'll be handled. Same thing with the property. And most people don't have a back office, and I understand that. And they probably, I'm all about doing something once or twice for the first time just to learn it and then explain it to somebody else, because I know everybody just wants to have somebody else do things for you. But if you're a real business owner, like you need to learn and do it yourself. Could there be an expert that knows it better than you? Possibly, but you need to understand it yourself. It's your money, especially in this business. It's your money. The financial consequences related to a lot of these deals. So like we learned it ourselves, and then we gave it to our back office. The system, right? Like if you buy a software, just like any software, right? Like it's not gonna be built out perfectly to what you want. You need to map things the way that you see fit, and you might not know. And that's okay. Nobody knows at the beginning, but as you learn it yourself, then you offset it to somebody else. And, over time, you don't need to learn every little aspect of it, but you get my point. Like you need to understand the basics, and then you offset it to the next person.
Yeah. So, and there's two things. One, is that software is as good as the data that you're putting into it. Is not going to cure your inherent problems, right? Like,
yep.
If you don't like talking to tenants to collect your money, or you don't like filing your evictions, even though you know that you owe the money, the software is not going to do it for you, no matter how automated it can get. You still have to put the proper data into that software and make it usable for you. And to go along on those lines about proper data being entered into it, the reason we liked QuickBooks so much was, to us, it's the gold standard of, we wanted to be bankable, right? And we wanted to make sure we had a good balance sheet, we had a good P&L. We could show banks at a click of a button, here's our information. We're real people, right? Like, we're not just some fly by the seat of your pants investor, that we actually know what we're doing, and we're out here trying to do this right. So the fact that we're able to go point, click, and hand. I remember one time we handed a banker, he sent the request over. He's like, yeah, like, I just need to see like your assets, your liabilities, and like, your income and your expenses. I'm like, so like a P&L and balance sheet? He's like, oh, you actually have one of them? I'm like, yeah. Like, this is what we do today, right?
We're a real business. That's what businesses do. If you don't know how to.
From being a beginner investor to like, hey, here's actually, open the book and said, here's what we have, dude. You know what I mean? Like, what do you guys want from us? It really changed the conversation. And I know we're getting kind of away from property management software, but again, like, there's certain features that what's important to you. And honestly, the tenant capabilities weren't as important until we started to grow even further. And Jason, I know maybe it's a better question. I'm really just asking myself, I guess, but I don't want to keep talking. But I would say, and hear me out, I would think from 0 to almost about 15 units, I think you can get away with running on Excel spreadsheets.
Yeah, I think so. And I think so. And I think between 0 and 2 units, I think 0 to 2 units, you can do yourself, everything yourself. You should be doing it yourself for the most part to learn. And then the problem is between like 2 to 20 units, you don't have the money or the resources to pay in-house employee to do it, unless you already have resources that you can divert over to there. So you probably need some sort of property manager, and then you reassess afterwards. Let me ask you a question, because here's one hiccup that a lot of people run into, and I know a lot of people don't do things the correct way, and they just kind of like, oh, it's my CPA's problem, like, deal with it. But let me ask you a question. When you put a job in YouTube in QuickBooks, it's called a property by class. Is that right? Like each individual property you have, is that what it's called? Property by class?
Yeah. So each property we have, it's an asset, right, on our balance sheet. And then when you do your P&L, or any dollar in and any dollar out, I think what Jason's getting at is each property is a class. So every dollar that comes in and out of our company is assigned to either a property, or it's general for, D&I, what we're doing, right? So at the end of the year, we run a P&L by class. Actually, we're doing it right now. We're setting up our budgets for 2021. We can run a P&L by class and say, well, what the hell's going on in our portfolio? Which ones are winners? Which one are losers? What problems did we have over the years? How can we improve it? Work with Ryan, our project manager, to say, yo, dude, like, hey, man, we know, like, last year we noticed turnover costs were like kind of high. We're like, hey, Ryan, what do you think about this? He's like, yeah, we need to find a better source to turn, like, our guy's really good at building houses, but he's not the best turnover guy in the world. So we need to find a better way to handle turnovers. And we worked on that this year. And hopefully at the end of the year, when we look, our cost is going to be better, right?
Well, so this was my question related to that. Did you used to have since you typically do renovations first, and then you turn it into a rental property, right?
Yeah.
It's not technically, a rental property until you put it into service. That's, I think, the accounting term that they used. So did you used to have 2 classes per property, or did you just, because see, I had to do things differently. Like, I couldn't do the construction in Yardi, so we used to use 2 softwares, and you know, the last one I renovated was 2016. That ended up being a rental. So I don't remember what software I used to use. You might even know.
Oh, Sage. You were using Sage.
Oh, yeah, I used Sage.
Yeah.
Oh, yeah, I use Sage Construction, which I could have used QuickBooks. And anything we've done in the past or recently was always QuickBooks oriented. But like we used to have it in Sage, right? So let's say, hey, I bought it in 2018, renovated it, sold it, or in early 2019, I turned it into a rental property, right? Because during the construction, there's construction phase. And then after that, then I would put it in the property management software when I put it into service, because everything's taxed very differently. And I know nobody's doing that the correct way. I mean, the real real estate investors that own properties that take this business seriously are doing it the right way, but that's the way you're supposed to be doing it, right?
Yeah.
So you were doing 2 classes, or you're just kind of converting it to in service afterwards?
Yeah. So I think this is going to relate to Jake's question. What we would do is when we would buy it, we would buy stuff that was completely, everything needed to be worked on and renovated. So what we would do is we would make that class. And again, the class is just the dollars in, dollars out. So it's always relatable to, but we would make it inventory, right, on day one, because we didn't know what we were doing with it. Are we going to keep it or are we going to sell it, right? So we would make it as inventory, and then we would have sub inventory class. So it's other assets, and then you make it the property name, you click inventory, then you would do 123 Main Street. And then we would have under that, we would have carrying costs, bank fees, deposits, subcontractors, and materials. We didn't get down into the minutia of like, we spent $32 on plumbing. Like, we didn't care about that. We said, here's a general idea of what it is, and then the closing costs. And then once we were done doing the property and it would go in service, or we would refinance it, we would then journal.
Refinance closing costs were in there too.
Yeah, exactly. So we would roll all that in, and then we would turn that from inventory down to a fixed asset.
That's right.
Right. And so when we would do that, the accountant could see that journal entry, moving it from inventory down to a fixed asset that's actually depreciable, and she can see where the money was coming in and coming out. And actually, hopefully, Jeff's going to join us next week to discuss some accounting things. So that's how we would do it at the beginning. And then Jake, for you on the backside, hopefully no three-letter agencies are watching. But what we do is we run everything through repair and maintenance all throughout the year, unless it's a major CapEx like a roof, something that we know is going to get flagged at the end of the year. We run it as repair and maintenance, and then the accountant will say, hey, I noticed it's like $7,000 on this property. That seems out of normal tolerance. What the heck happened here? Did you have an issue that you had to fix that was legit $7,000, or did you do capital improvements? So there is some little reconciliation. Once we figure out what we spent where it belongs, then we'll journal entry accordingly from down to the balance sheet or to stay on the P&L, because the thing is, when stuff goes on the balance sheet, it affects your P&L, and you're not truly looking at your proper cash flow. Same thing we do with mortgage payments at the end of the year. We journal entry, principal pay downs. We do it all at the end of the year. We like to look at our P&L almost as the cash flow statement throughout the year. Then at the end of the year, we do everything accordingly.
So you run it all as interest, or you run it all as interest, and then you take your principal out afterwards at the end of the year? Why don't you just do it in one time?
Sometimes we do, but like I said, I know we could run a cash flow statement, but sometimes it's easier just to look at the P&L and say, "Oh, cool, we made this much money," and it's.
I understand, because all your
because you also got like if you're building out properties, or you do a major CapEx, or certain items are going to the balance sheet, and sometimes it doesn't get accounted for. And honestly, I'm not in love with QuickBooks cash flow statement. But anyway, long story short, that's what works for us. And plus, at the end of the year, for those of you that saw my interview before with my business partner, Dan, he likes to get down into the weeds. So at the end of the year, we like to reconcile everything all at once and make sure it's clean, cut, and we understand, and we can explain it to our accountant.
Got it. Jake, I haven't heard of that property mailed. I personally haven't heard of that, so I can't give you any insight on that. Yeah, I mean, to sum up a few things we talked about, the biggest thing with rental portfolio is determining really what you want to do and what size you want it to be. And there's no right or wrong. I mean, I know people, like Ian, who have hundreds of properties that self-manage them. And I know hundreds of, a lot of people in his place that outsource all the property management to them. I mean, when we had an interest in a property management company, we were managing hundreds and hundreds of properties for the same people over and over because they just didn't want to deal with it. They literally wanted all the reporting done for them with everything. And then when they file everything on their own, it makes their life so much easier. They're just getting a check, right?
Right.
They're getting one check. Like, it's very simple reporting wise. So, typically if you're doing it yourself, you need multiple parties involved, right? Like, you need someone for maintenance, you need someone for, improvements or turnovers or, bigger ticket items. You need a bookkeeper, you need kind of a liaison with tenants and things like that. At our size portfolio, we typically have one person. The way that we have it set up is we have one person back office. They work on tenant stuff. They work on accounting stuff. And all maintenance calls go to, a third party contractor who we have a relationship with, and he handles that with his guys. And then if we have a turnover, we put a crew together or we get him to do that. So we don't have, at our size, and it works. So again, it just depends on who you are and what you want out of it. I am a huge believer, though, that if you're just getting started, you should hop in the trenches and figure out everything yourself. And it's going to take time to do that. But, I personally believe from experience that that's what works the best.
And I think we glossed over a real key factor. Whether you're the junior man on the scene or you're the most senior guy, I think it's very important that you take the time to understand P&Ls, balance sheets, what reports you're going to get from your property managers, what reports matter the most to you. Because I remember when we said, hey, Jason, show us around on Yardi. He's like, I don't care about anything except this one report here. I want to know our trust balances on each property. Like, that was the most important thing to you.
No, you're right.
Versus being Dan, we wanted to see the balance sheet and the P&L. That was the most important stuff to us, right? Like, so understand the reports you want to see from your property manager. That's most important to you, and the ones that you're going to look at that make the most sense, right? Because when you're having a high-level conversation, whether it's a banker, it's your accountant, right? Like, just because you have an accountant doesn't mean they're the best real estate accountant out there, right? So you need to have an intelligent conversation with them based on what you're having or what you have to present them. So if you're interviewing a property manager or you're just getting started, you might want to ask, hey, like, what reports are you going to provide me every month, and understand those reports that you're going to receive.
Yeah, I agree. Take it seriously. It's a business. And it doesn't matter if it's one property. Listen, one property could spit off hundreds of dollars a month, right? It's freaking great. That's the beauty of it. That's the beauty of it. And I think every real estate investor that has a decent sized portfolio, I think they do take it seriously, and they have to take it seriously, because if not, that thing's going to fall to the ground. If you're not looking at financial reporting, it's like, that's important to me. It's just financial reporting. That's what I care about. I want to know what, our cash balance is per property, and what that term means is, I want to know, over the life of my rental property, what's the positive cash balance that we have per property, right? And some of them could be negative. There could be deals that, like, I'm making $300-400 a month on, and then all of a sudden I have a huge capital improvement, and it digs into that. But we've never had to put additional funds or resources or capital into any into our properties, into our rentals, because we didn't put a lot of high leverage on them at the beginning, right? That was important to us. We didn't want to put a lot of high leverage into them. They have appreciated in time, so that's a bonus more than anything, right? You're not going to plan on that, but like, that's a bonus if that happens. And we've tried to accelerate the principal pay down. That was what was important to us, and like creating some sort of widget. So I know, when a rental comes in and it fits this mold, this criteria, I know that it's not going to be a lot of heavy lifting, right? I set everything up on the front end. It's all set up on the back end, and it just gets put into that portfolio. It's just like doing loans with us, right? I mean, we do 25 loans a month. If I wanted to, and I had the right opportunities out there, I could do 50 loans a month. I have the resources for it. It's just finding the right ones to do it. right? I mean, you guys could buy another 100 units tomorrow because you already have that facility in place. And I think, that's where you got to strive to get to. You got to get to that point. If you want to, you don't need to. There's nothing wrong with, buying one rental property for the next 10 years, making $300 a month in positive cash flow. And then let's say they're worth $100,000 each. And at the end of every 10 years, one gets paid off. And then you have $100,000 pop, $100,000 pop, $100,000 pop, and so on. That's a great model as well. Yep. So it's just, I think the consensus is figure out kind of what you want out of it, but take it seriously. And I do believe that one of the last things you should do is go buy a rental and just hand it off to a third-party property manager up front. I think you owe it to yourself to learn a little bit about the business, understand why your tenants are going to call you, understand kind of their problems and their issues. And I'm not saying that should be your full-time business model. I think you should do that on one or two to learn it and then offset that to somebody else.
Yep. Hand it off or build something out for yourself. No, it's not the sexiest topic in the world, but it's something that, especially in the world we live in nowadays where there's tech in your face every single day and people think that tech is the answer, software is the answer. Was it SaaS, software as a service, right? Like, unless you put the data in there or unless you know what you're looking at, it's just another useless monthly bill, right? Use it to your advantage. How can you make it help you grow your portfolio? Like Jason said, I believe everyone should take the time to learn and understand, I'm pointing like, here we go. That you should understand what you're working with, what it looks like for you, how it relates to you, and how you can utilize the information to yourself. If anyone ever wants to have a conversation, I've used a few of them. I'm not a professional on them by any means, but we've loved QuickBooks. We love QuickBooks. I've used Yardi. I've used Tenant Cloud, and we're about to use Appfolio. So if anyone's got any feedback, feel free to try to find me, Ian at equitywarehouse.com, or you can find me on any of the social media spots. And if anyone, wants to jump on and hang out with us, we'd love to have you.
Cool. We got anything else to add for this week's Real Estate Reserve podcast? I know we went through a lot of stuff and, a lot of people, this might be a little bit over your head, but it's important.
I'll tell you what, let's go off topic because I got about 5 more minutes here. Is that, I'd love to hear what other people would love to hear. I would love to hear what other people would like us to talk about for show topics. I think our buddy Alex Pardo just did a badass one where he did a debate between multifamily and commercial versus single family investors. If there's any topics you guys would like to hear about, whether it's financing, anything to do with real estate, let us know. If we don't know about it, we will go out and find the right market experts because we have a pretty big wealth of knowledge and network to find people, and would love to discuss it in depth.
Yep.
Max has actually got a pretty cool one. Color schemes. We should bring Amy on and see what the current trends are. Yeah, I mean the market's like super highly competitive right now, right? I'd be interested to have, Amy on and see what the best product to put out there is right now. So
we can do that.
Can we get a poll up on our website, on the Real Estate Reserve podcast website, of a way for people to submit, like, hey, let's talk about this. So
yeah.
Anyway,
Jeff just responded to you. If you're watching this too, Jeff likes to do later in the day. 5 p.m. is good for him. I can do 5 p.m.
Okay. Well, let's set it up. We'll get that set up. So we're going to have our accountant on, I guess, hopefully over the next week or so, and talk tax stuff because we are coming up on year end and there's stuff that you can tax prep for that will be good and beneficial for everybody and going through it.
You know what? Here's another thing to think about with this software.
Yeah.
I don't know about you, but my rental business entity is always my most expensive tax return compared to, and I get a lot of K1s and I file probably 10 business tax returns for different entities and ventures. And that one's always the most expensive. Our lending one, and keep in mind, the reason why is when you own real estate, you have an asset and a liability, not just income and expense. Most of my other entities are income and expense, including my lending company. right? Mostly income and expense. So that gets a little bit more expensive. So one of the things that we did realize is as we got proper software in place and spent the time to do it, our CPA bill went down tremendously, right? So think about that. That potentially could make sense related to, if you have a property manager that does some of that stuff, or you have somebody in your office, even if it's part-time, that does this, right? Like, imagine if you pay somebody, I don't know, $400 or $500 a month, right? To do some of this stuff. And, it might not even have to be that. I mean, if you're a small portfolio, it might be $100 or $200 a month. But let's just say it's $500 a month. You can get somebody pretty capable who understands accounting. They're not going to be on 24/7 call for you for tenants, but they can help with some books and some reporting and some other stuff. Maybe it ends up costing you $5,000-$6,000 a year. Well, that offsets your cost for accounting. Your accounting costs could be at least that.
Exactly.
Your CPA is going to be a hell of a lot more expensive than anybody else that's doing some of these things for you. So that's another reason to get a proper software and a proper system in place. And if you don't know what you're doing, you can't have an intelligent conversation with your CPA. I didn't know accounting. My business partner didn't know accounting. We didn't know any of this stuff. I actually failed accounting in college multiple times because I thought I would enjoy it, but the principles of accounting are very ass backwards sometimes. Right? Like it doesn't make a lot of sense unless it's your own money and you care about it. If you care about money, then you learn about it. Like that's how I learned how to do this stuff, was real time. And I had endless conversations with my CPAs because I was like, this doesn't make sense.
Right.
What do you mean I can't? What do you mean I can't deduct this? What do you mean you depreciate it? I have to follow a depreciation schedule for this capital improvement instead of writing it off as an expense in real time. So things like that. So you learn it. I mean, I'm in this business to make money, and that's why you own a business typically. So you learn it. You learn it full time. Let's see what Victoria's question is real quick. Would love to hear about new construction. Never did new construction for rentals, like purchasing a tear down and rebuilding, fixing, flipping, pros and cons. Have you guys ever done ground up construction and you turned it into a rental?
Yeah, build to rent, BTR or whatever. No, we've never done it. I think there's some, and that's actually good. I'm gonna write this down for Jeff because there's an opportunity zone that I think people could take a lot of advantage of on right now. In regards to tax advantages currently, I think they run out next year. I'm not an opportunity zone expert. That's another person that we should have on to discuss, but there is some tax advantage to that. We should have Jimmy Harris on again and go over.
Has he ever done build to rents? I mean, I feel like the areas that I typically have stuff in, I don't think the numbers make sense. They wouldn't make sense. I'm not stating that. I guess it depends. Me personally, they wouldn't unless they were multifamily.
Yeah. Well, and that's pretty true. I think across the country, I think a lot of the build to rent stuff, and I'm just speculating based on what I've heard at some conferences, is the same stuff that you would sell to a starter home type. The next asset, I won't say asset class up, but just like the next price point up from where we are. So like in our market, you'd be in that 250 range. I think that's where they're getting the competitive advantage because.
That's right.
Build it cheaper. They're holding it longer, and go from there. Victoria, what's up? We need to get you on here. I know you're out there killing it. Would love to hear about your what you're doing as a mortgage broker right now, even just on the residential side. I know it's crazy out there, so we'll have to get you on here.
Yeah, Victoria, we pay about I think $8,000 a year to our CPA, which is a lot of money. And a lot of it is because some of these things, I mean, that price has gone down over the years as we've gotten better and better and better and better. But it's still, it still ends up being expensive. And I have a full-time employee that runs on the back office. Over the last few years, it was probably cheaper than that. But that was one of the bills that I remember. It was like $8,000 or $10,000, and it pissed the crap out of me because it shouldn't have been nearly like that. And I mean, in general, we pay expensive, I feel like our CPA in general, I mean, you get what you pay for, in my opinion. And we have someone who I think's good. We also is DC area, so we get Washington DC prices. But, I think our normal business tax return's about $2,000 to $2,500. And I mean, I have a full-time controller on staff, and I have another full-time accountant on staff. And it gets sophisticated, but again, some of the other business ventures can support that, right? My lending company obviously can support that. An $8,000 tax bill or $10,000 tax bill on 20 rental properties, not so much, right? So that's more of what got us. So that has been going down, and a lot of that was also early stages when we would buy the property, completely renovate it, and then turn it into a rental, right? You had two stages of that, right? So there's a lot more classes of expenses and other things that we're laying in, and that was always challenging for us, was taking it from, and that's why I asked Ian that question earlier, if you're listening, related to did he keep it in QuickBooks under the same class. That was always challenging because we had two records of each property. We had it on the purchase side where we tracked everything into construction, and then we converted it into a rental. And as soon as it went into service, it got put into our property management software. So since we haven't had construction or acquisitions over the last few years, it's definitely gone down in price. But the important part is as we've learned, and how right now it's just printing out reports and sending them over. So our goal was always to get that back to whatever our corporate return rate was, which is like $2,000 or $2,500. But you all know as well as I do that a CPA is going to bill you out a few $100 an hour, and make sure it's organized. It's much easier paying somebody $10 or $20 an hour to do all of that stuff for you.
Yeah, I'm a talker. I like to pick up the phone, and it's always, "Hey, how you doing?" I'm like, "The bill's running. Would you stop?" But I love our accountant. Obviously the girl in Jeff's office, she's awesome. But what I tell her all the time is I'd rather pay you now, because when I'm on that stand, and I think Victoria would maybe talk about it, but I think she knows a few people that have gone through an audit, and it can be a nightmare. And that's the advantage of having the accountant, whether they're going to protect you or not, but at least their name is also on your tax return, and you can walk through with them. And that is way more important than trying to stick your stuff in TurboTax or anything else like that. Speaking of softwares, spend the money and do it right. And I think we have a real in-depth conversation with Jeff over the next week or two, and I think everyone will. She's laughing. She knows. We will have a real in-depth conversation about this. So glad we can get a little bit deeper. So we'll keep everybody posted for that for next week. We'll send out an email blast because that's an important one, and I'm glad people are interested in this topic. I like this topic. When we started this conversation, the topics that people are usually the most interested in are the sexy topics like finding money and finding deals. But like that is such like on the front end stuff. The back end stuff as a business owner is really sexy as well, and it's got to be, because it's not just making the money on the front end, it's keeping it and doing the right things with it and figuring out as many advantageous things, tax loopholes, things like that you can do with it. So make it a sexy topic if you don't believe it is, and we will get Jeff on as well. Cool. You good, Ian? Anything else you want to add? No, I'm good. I'm just watching it rain outside, knowing that I have to go outside. I'm already soaked from this morning's walkthrough, and I can't wait to go get soaked again. So,
where are you going to go? Your 76 unit?
Yeah, we were out at the new project this morning, walking that with our project manager to get a game plan, which we'll probably do a case study on here over the next.
What's your project? What's your project manager? What does he do? Is he for improvements, for capital improvements?
Right? Yeah. He'll be managing all the contractors and everything, and boots on the ground, eyes and ears, and keep us where we're supposed to be. He's very good at what he does. And then we're going to meet him over at the 76 unit to plan the rest of our capital improvements over there. Dan's going to work with our newest employee, Raquel, who's been an all-star, and work on some stuff with her for eviction stuff now that the courts are open again, and keep this thing rocking and rolling. So we will catch you guys next week. Thanks for tuning in. And Jason, you remember how to play the outro?
I do. If anyone's interested in a 10-unit portfolio, might as well plug it real quick. I'm going to put the link below and take a look. It's an interesting portfolio, and there could be some money to be made for the right investor. And our company is actually willing to finance it with 30% down. So could be an opportunity. And Scott Freitag's company, Eastern Savings Bank, if you want a bank loan on it, he'd be willing to do it as well. All right. Check everybody later.
Thanks for tuning in to the Real Estate Reserve Podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.